Well, definitely. I think what we can start to see is an impact on the implemented tariffs already. So we have seen ISM new order index plunging, still well above 50, but plunging quite significantly from the months before, unexpected plunge. We see some numbers when it comes to earnings of some companies that are telling us that cost pressure is increasing. In particular, also if you look at ISM, the cost side actually has started to increase again. And we do see a global slowdown. Some of these macro indicators are rolling over. And we do think the Fed will start to pay more attention to the slowdown globally, but also in the US. The fourth interest rate hike, or basically the hike in December, is still a given. That's our expectations, but probably in the first half of 2019, the Fed will be less hawkish and probably on hold until June for the next hike.
That's interesting, Adrian, because you talk about cost pressures being one element of the data that many are keeping an eye on. And I wonder, too, what that means for earnings going forward, because so far earnings in the U.S. particularly were very strong. But in some cases, it's the guidance that has investors rattled. Is that right?
Exactly. I mean, we have seen, again, more than 20% earnings growth in the third quarter. Fourth quarter, probably still very strong. But that's also artificially basically implemented by the tax cuts that we have seen at the beginning of the year. So we do expect a quite significant rollover going in 2019, particularly in the US. So we do expect high mid-single-digit numbers in the US. The same basically for Asia, where we expect around 6 to 7% earnings growth for next year. And also Europe. While Europe probably gets a bit of a tailwind from a weaker currency going forward, still the numbers don't look extremely appealing at this stage.
A weaker currency going forward for Europe, I mean, is that dependent on what happens for Europe itself, or are you thinking more for the direction of the dollar?
Well, we actually have a 6 to 12 months view where we see the euro stronger. In the short term, the US dollar probably still can rally into the Fed hike in December, but as said, we do expect a less hawkish Fed afterwards, and that should start to weigh on the US dollar in particular. Currently, we have this year-on-year effect. Last year, the very strong euro, this year, weak euro, so the companies start to benefit out of that. And we also think that some of the numbers we have seen, macro numbers in the European economy, have been pretty weak, that they can start to re-accelerate going into fourth quarter and also beginning of 2019, also driven by a weaker currency. So we are not particular US dollar bulls at this stage. Said there's maybe a little bit to squeeze out over the next couple of weeks, but then we actually become quite cautious on the US dollar.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.